All right. Good morning. Good morning, everybody. That's only if you aren't on the East Coast, but if you are in the great state of Georgia, good afternoon. I'm with not Ashley. I'm with her father, who is a legend in his own right. This is CL Smith. CL, how are you doing this morning or afternoon, I
Hey,
should say?
Yeah, Parker, I'm great. It's a great day. I just came over to Ashley's. She was out of town today, and I've been here for 30 minutes. I just now got the heat on. I didn't know if
Oh,
you heard anything. So
well,
I noticed that you've got your short sleeve shirt on. I could be that way, but not
yeah,
right
that's
now.
right. It's
Uh,
Friday is I used to be a teacher and a principal in Memphis, and that's how I actually met Ashley. We've shared that story before. And, I probably spent 8, 9 years of my life wearing a suit every single day. But on Fridays, you got to dress down. And I used to love dressing down. I was worse than the kids. And so old habits die hard. So I'll try to get up, get showered, even though I work from home mostly, get up, get showered, wear something nice. But something about Fridays, CL, I just got to put on my either a Braves hat or a Georgia hat and a t-shirt and just get ready for the weekend. But speaking of Georgia and my Bulldogs, pretty big game tomorrow.
yeah, you're following that better than I do, but they are a lot of fun. They're doing a great job.
Absolutely. Okay. Well, enough about that. Let me go ahead and share my screen and we'll get started. Y'all, you are in for an incredible treat today. And I am going to make sure that my subtitles are off because that is incredibly distracting. Give me one moment. Here we go. All right. Well, welcome, everybody. I am Parker Couch, and this is CL, and
Hello.
you will have to forgive me because I need to share my screen, and my computer is glitching and is not allowing me to exit out of this screen. Give me 1 second, everybody. And show. This is all, is the second that Ashley leaves CL, we're having technical difficulties. That's on me. All right, here we go. I'm going to go ahead and share this screen. Now we're cooking. Like my granddaddy used to say, now we're cooking with grease. All right.
So Parker, as we get started here, one of the things is, Ashley and our goal is always first and foremost for our buyers or our sellers, and we want to help them make wise choices and help them maximize their purchasing power. And sometimes, Parker, we may even suggest to them, hey, this is not the time to buy a house.
Right.
We could help them. We could still find the house for them. But we really look for their best interest, and we want to be sure that what they're doing today is building a better future for them. Sometimes that means putting on hold something for 6 months or a year. And, the things that you're going to go over today, Parker, with the talking about credit, that probably should be a prerequisite even to finish.
Yes. Yes.
And
absolutely.
In college, because, if you've got good credit, one of the things you can do is you can buy a home, and buying a home is one of the steps in building net worth.
Yes.
And most people would like to have to build net worth and to build assets to help them have a secure future and not worry about all the stresses that come with not having enough money and having bad credit. Correct?
That CL, you're exactly right. I think that's a beautiful way of getting this thing kicked off. I think that something that drives me bananas in equal measures. One, it's the borrower, or in your case, the client, who is determined to overextend themselves financially in the purchase of a home. And this is like folks who barely have good enough credit, who are in crazy debt. So that's one, just because, at the end of the day, you've done it. You've had an amazing career, CL. You've been able to put food on the table for your family for decades now doing real estate, but also you want to sleep well at night. And I know that there are certainly some loan officers out there, and there are certainly some realtors out there who will do and stop at nothing to make money. But I know that I'm not that way. And I know that you and Ashley are not that way. And I love that you framed at the top. If you're watching this or listening to it, know that if you're talking with a lender or a realtor and that lender or realtor tells you it's a good idea to wait, it really probably is a good idea to wait. And you also probably need to keep that lender and keep that realtor, because that right there is the realtor or the lender not making money, right? But instead looking out for your best interest. And so that's one. But the second thing, CL, that drives me bananas is I will get on a phone call with somebody who really wants to buy a home. They got good income. They've saved up money, but they say, you know what? I'm not ready yet because I got to keep working on my credit. My credit's low. I got to keep working on it. I got to keep working on it. And what people don't realize, credit is so important. It is so foundational, but it's also a game, CL. You got Experian, TransUnion, Equifax. Every single one of those bureaus, they calculate credit on different scoring models. And each of those scoring models has its own set of rules. I love playing board games, and that's really what credit is for each of these bureaus. It is a board game. So if you know the rules to the game and you can play the game, well, you're going to be at an advantage over most, I would say 99.9% of folks. And so here's the example that I give, and then we'll officially kick off. I had somebody, great income, making over $100,000 a year, had saved up $25,000, wanted to go FHA, had the money to do it. But he had a 5. He said my credit score is in the 500s. And he goes, I've spent thousands of dollars trying to never have a credit card balance. I've paid off my car early and I just cannot get. And I said, something's not right here. So I've got a program called Wayfinder, and I was able to run his credit. And you know what happened, CL? And I'm not making this up. His ex-wife's mom, aka his ex-mother-in-law from 5 years prior, had added him as an authorized user on her Sam's Club card. Well, when he and his ex-wife divorced, his ex-mother-in-law, she never took him off as an authorized user. Well, guess what happened a couple of years after that divorce? She ran up that Sam's Club card and stopped, and it got charged off, and she didn't make her payments. So what I was able to do is he was able to go to his ex-mother-in-law, probably an awkward conversation, and say, can you please remove me as an authorized user? And all I got one piece of paper, and it was a piece of paper from the Sam's Club creditor that said, ex-borrower is no longer an authorized user. I submitted that to the credit bureaus. CL, his score went up over 100 points, literally. And it cost him $0. So I say that because when it comes to, if you're watching this, if you're listening to it, doesn't matter which side of the fence that you're on, whether you've overextended yourself and you're spending too much money, need to rein it in, you need to listen to what CL and I are about to talk about. But also, if you are discouraged because you just can't figure out why you can't get your credit up, you definitely need to be watching and listening to this, because the fixes might be tough, but also the fixes might be easy. And you're not going to know which of those it is until you actually learn the different credit secrets. Well, if you have any questions, please make sure you type it in at the end of this. CL and I will answer any questions that y'all have. But the man, the myth, the legend, Mr. CL Smith, and his amazing daughter, Ashley. CL, thank you so much again. Welcome, welcome. Is there anything that you wanted to add to your beautiful monologue at the top before we keep going?
Yeah, she's a pretty lady, isn't she? So
well, I'm a married man, so I'm not going to weigh in on that, but I would be very proud of her.
That's wise, Parker. But I really like what you just said too, because I don't know that thinking out of the box might be the right word, but some of the things that you're doing, that you do to help your clients to improve their credit scores, I've not heard any other lender even suggest that before. Most of the time, I think it's a lot like real estate agents. I just need, or maybe a car salesman.
Right.
Yeah. Because I got to buy groceries this week.
Yep.
And it should never be about needing to buy groceries this week. Our clients' needs should always be first, even if it means we go with less. That's our responsibility to them.
That's right. That's right. And something my father always said, CL, and I appreciate that compliment. He says, are you going to be a salesman or are you going to be a scientist? Right. And there are a lot of lenders out there who treat it as a sales job. And that's a component of it. There are a lot of realtors who treat it as a sales job. But what's a scientist? A scientist who is somebody who, when they're presented with a challenge or a problem, is not going to stop, but is instead going to try to be as creative as possible in order to overcome that problem and challenge. So I appreciate that compliment, but I got to give credit to my old man, because that's always stuck in my head. Are you going to be a salesman? Or are you going to be a scientist? And I try to be as much of a scientist as I can, as well as drumming up some business. So CL, tell me about this beautiful family photo we got here.
Well, that is our family. We get together every Thanksgiving, come together. The ones on the right, they live in Miami. And I've got 2 grandchildren there. And what took them to Miami is Melissa is doing her ENT
Oh, that's
residency
awesome.
there at Jackson Hospital. And so there's Ashley next to Melissa, and then next to me. And then there's my wife, Sue. She and I are together. And then on the left is Matt, Erica, and Max, and they live in the Bay Area of California.
Oh, wow.
And so anyway, it's a wonderful time every Thanksgiving. And so we've done that picture at that same location for 3 of the past 4 years.
Oh, that's great.
Why do you think we didn't do it 4 of the last 4 years?
Oh, I know we had COVID. I know that was tough. I'm glad we're through it.
Yeah, and so the travel restrictions made it really tough. Actually, Max was just born the day that they locked the hospitals down for COVID.
Wow.
So
wow.
Sue and I, we flew out to California, and they let us in. They made an exception, and they let us in to see little Max because he was born 2 months early.
Wow. That's incredible. That was very kind of them to do that.
But it's our family. Where I'm very proud of all of them.
Well, you should be. And everyone, y'all know me, Parker Couch, co-host of this monthly webinar, First Friday Real Estate, former teacher, principal, grew up in the business. And here are my 3 promises to anyone I work with. Loans will always close on time. You will receive proactive communication. And then also you're going to receive a VIP customer service from me and my loan partner, who also happens to be my brother. But let's talk about this for a second before we actually jump into these credit secrets. And the showbiz term is vamping. That's what we've been doing, CL, is you don't want to get to the good stuff until you're about 10, 15 minutes in, because you allow folks to, same reason you have commercials before a movie starts, right? So we've been vamping. We did a good job with it. We're about to get into the meat of it. And today, here's what you're going to leave with a really solid understanding of. And just so you know, if you're taking notes, go ahead and relax and stop doing that, because we've got a great handout that you can download. And also, if you've signed up for our series, you'll receive the handout for this webinar as soon as we're done. But what we're going to do, first off, we're going to actually define credit. What is credit? We're then going to talk about the importance of good credit scores. We're then going to talk about credit scores and credit scoring factors. We're going to talk about common credit problems, and then we're going to talk about common credit problems and how to fix them. CL, you got kind of a personal anecdote or experience that you wanted to share before we jumped into our first point.
Well, there's a couple of families, Parker, that have made that I know personally that's just made real poor credit choices.
Yeah,
they've got credit card debt. I know one family that's got credit card debt, Parker, if you can believe it, of $150,000.
Wow.
I don't think you can pay your way out of $150,000.
Yeah, that's tough. That's tough.
And so it's impacting their ability to rent. And when they do rent, their rental rates are so much higher because there's a risk that the landlord has to take with them.
Right.
And there's no way that they can qualify for a home loan.
Right.
So and one of the families I'm thinking of, they've got children, and I cannot even imagine how somebody would dig themselves in so deep.
Yeah, I know it's really, really tough, and sometimes it's because we got some good old fashioned just not being disciplined, but sometimes there are external life factors. I can't tell you how heartbreaking it is. I think probably some of the worst credit card debt I've ever seen was from a borrower who had run up all of his credit cards because his mother wasn't properly insured, and she got a pretty severe case of pancreatic cancer. And she ended up passing away, and he just ran up all of his credit cards because he didn't know that you could actually negotiate with, you could settle and you don't have, I just kept taking out credit cards and kept paying the bills as they came. Just real heartbreaking stuff. So I think that's a really good segue, CL, to talk about the definition of credit. But here's the big thing, because at the end of the day, you're an established real estate professional. I'm an established lender. But knowing your credit score, it is going to be the major, capital THE, the major deciding factor on whether or not you qualify for a loan. If you have amazing income, a ton of cash. I have a lady, she's a nurse. She's got $127,000 in the bank, CL, but she's got a 500 credit score. So at the end of the day, income's important. Cash and assets are important, but man, credit, that is the gateway. That is the gateway. And so actually, what is credit? I think the best way that I want people to define credit, it's your financial resume. Whenever you're applying for a job, you probably have a resume somewhere. It's, probably would need to dust it off if you're applying for a new job. But at the end of the day, that's what a credit report is. It is your financial resume. It tells us how much you borrowed. It tells us from whom you've actually borrowed. It talks about how well you've repaid your debts in the past. And then it's talking about how well you're actually handling your current debt. And so why is that financial resume important? Well, why would a regular resume before a job interview be important? Well, if you come in with a resume and this is the big difference, right? If you're somebody who's gotten fired from previous jobs, you'll probably think of a creative way to spin that. If you're going to interview for the job, there is no creative spinning a bad credit report. If you've defaulted on stuff, if you haven't paid, there's no spin in that. It's like going to a job interview with a really bad resume, which no one would want to do. So, but why is that important? Well, when it comes to actually buying a home, it's going to help you obtain a lower interest rate. It's also going to help you get better jobs. Believe it or not, there are a lot of jobs and careers that require your credit to be pulled. It's also required to lease a property. It also is required to establish utility services. And it's also required in opt-in cases to actually obtain insurance. CL, are there any other things that you think we could add to this list off the top of your head, or anything else to say when it comes to why is it important to have good credit besides buying a home and getting these things on this list?
Well, Parker, I think you pretty much nailed it here, because I was thinking myself of the reasons credit scores were so important. And most people don't think about, do I need it to get insurance? Or, hey, is it going to make a difference when I'm trying to get this new job? And
Yeah.
It makes sense that an employer would pull credit, because it's kind of like wanting to be sure that you got a college degree. If you say you've got a college degree, they want to be able to depend on this person. They want to know that they're trustworthy.
Yeah.
And if somebody doesn't have good credit, they've been making poor choices somewhere in their life. How is that going to impact the choices they make in this new job?
Yeah, that's exactly right. Is, how can I trust you to do X, Y, and Z functions when we can't make our payments? Right. No, I think that's a great point. Now, but this is super important. I'm not going to spend a ton of time on this, but there are 3 different types of credit reports. You have a consumer credit report, you have an in-file credit report, and you have a mortgage report. I cannot tell you how many times, CL, people call me and they say, my credit's great. I got a 700 plus. And then I pull it, it's more like a 640, 650. Here's why. If you've ever signed up for Capital One Credit Wise or Credit Karma, 1, they're not doing hard pulls. They're doing soft inquiries. But 2, they're calculating your score based on that consumer credit report. When it comes to the scoring models for a mortgage credit report, it is a much more difficult, difficult scoring system. It's harder to get it's much easier to have a higher credit score with these other 2 credit reports. A mortgage report, it's going to be the toughest. And it makes sense why it would be the toughest, because you're not just borrowing $5,000. Most people, when they're borrowing money for a mortgage, hundreds and hundreds and hundreds of thousands of dollars that they are promising to repay over a 30-year span. So that makes sense. What I want you to do is not UCL, even though you're certainly welcome to. I'm talking about the you who are watching. If anyone's watching this, write this down: www.annualcreditreport.com. There was some legislation that was passed in about 12, 13 years ago, and you are legally protected, meaning you have the right to access your full credit report for free every single year. And this is the government-owned website. So if you see anywhere else saying, get your free credit report, and they're charging you money, you know what they're doing, CL? They're charging you money and then they're just going to annualcreditreport.com, right? So just go ahead and don't pay anybody. Just get your free credit report once a year. This is where you can learn your credit information, your public record information, and your inquiries. CL, I'm sure that you've had an opportunity to look at your credit report over your years of buying your own homes or applying for credit in various forms and shapes. What's something in your mind that just always kind of surprises you or maybe catches you off guard when you're going through your own credit report? Now, that doesn't have to be like, well, I'm just surprised at how perfect my credit is. But no, in terms of, oh gosh, I didn't know they had access to that. Or, oh gosh, I didn't know that was included in a credit report. Is there anything like that jumps to your mind?
Parker, no. I've been real fortunate as far as my credit goes throughout my entire working life. And I've really not paid a lot of attention to it. People would say to me, someone like yourself, we'll have no problem getting your loan. And we just, I started teaching Ashley and her brothers, Matt and Kevin, when they were young to save. And I started teaching them about paying off everything each month.
Right.
And so I guess it's just a discipline that I had, and hopefully they've carried throughout their days too, that there should be no surprises when someone pulls our report.
Yeah. It reminds me of, I heard somebody say one time, CL, that most folks who step on a scale are stepping on the scale because they're trying to lose weight. Right. And it's one of those things where that's kind of what you're talking about is, if the credit report's the scale, it's if you take care of your business. And that's why especially if you're younger and you're establishing credit right out of the gate, my goodness, rewatch this thing 18 times, because CL's right. Because he made good decisions right out of the gate, he was able to quickly get into a position in his life to where he doesn't have to really stress about having access to his credit report every year, because he knows he's taking care of business and his credit is going to be just fine. So that's actually, I know you didn't quite answer my question, CL, and I'm glad that you didn't, because I think that was a really profound point that you made.
Well, Parker, let me just throw
Sure.
in another note here. I just don't want to. Growing up, things were very difficult for my family.
Right.
And when I became an adult, I did not want to have those stresses in my life, and I didn't want to have those stresses for those that I love. So I tried to live within within our means, and so I've never expected a surprise on my credit report.
Yeah. I think that's exactly right. And this next section is going to talk about credit scores and credit scoring factor. And this will help you, kind of like how CL never wanted to have those bad surprises in his life when it came to his credit. People get really obsessed, CL, on getting a perfect score or getting in the 800s. I've had people who've had like a 780 credit score and they're like, dang, I thought I was going to be in the 800s. Well, here's the thing you need to realize. If your credit is a 740 and if your credit's an 850, the person with the 740 credit score is going to get the exact same mortgage rate as the person with the 850. So really, for all intents and purposes, CL, you could end this scale at 740. Once you get to 740 or higher, you're going to get the absolute best rates, whether you're shopping for a car, whether you're trying to get a line of credit, whether you're trying to get a home loan. So really, if you're watching this and maybe print it out, just circle 740 and just make sure you're doing everything you can to have your credit over the 740. Because what a credit score is it's really a statistical means of assessing how likely you are to actually pay back the money that you borrowed. Makes sense. But when we're talking about our credit scoring factors, and let me try to move our faces out of the way so people can see. All things are not created equally. I can't tell you how many times CL folks will say, oh, please don't pull my credit. And I'm like, well, we need to pull your credit because I got to see. It's kind of like, it's kind of like going to the doctor, CL. And then the doctor's like, okay, I'm going to need you to disrobe and put on this gown so I can examine you. And you're like, sorry, doc, I don't take off my clothes for anybody. right? It's like at the end of the day, you went to the doctor, something's wrong with you. You got to trust the doctor. And so I can't tell you how many times folks are like, well, I want to buy a home, but I don't want my credit pulled. I'm like, well, why don't you want your credit pulled? Like, well, every time I've heard that every time my credit's pulled, my score goes down. And that is true. When you have, it's called an inquiry. Anytime someone pulls your credit, your score usually goes down, but it only goes down like maybe 3 points. Usually it's anywhere between 1 to 5. Normally it's like 2 or 3 points. And you'll see right here that this new credit, frequency of credit inquiries and new account openings, that only represents 10% of the scoring models for all the major bureaus. But CL, what are the 2 categories? If you're watching this and you don't know anything about credit, but you're just looking at the screen and you're listening to me and you, what are the 2 categories that you would absolutely latch onto and make sure that you got right over everything else?
Well, Parker, I can't see the screen as well. Am I supposed to be looking at your numbers to determine which ones I should say yes
no,
to?
here's what I do.
The amount you owe.
That's right.
And,
yep.
I would pick certainly the payment history, 35%.
Yes, sir. That's it. That's 65%. 65% of your credit score is based on the things that CL was just talking about. Is payment history. Are you making on-time payments? I had a borrower one time, CL, get this. They were so determined to get out of credit card debt. They found the credit card that had the highest interest rate, and then they poured every extra penny they had into paying down the card with the highest interest rate. Sounds smart, right? Here's the problem. They stopped paying on the other credit cards, right? You know what happened? That payment history, and you know what's sad too? We're talking those other cards that they stopped paying, they had minimum monthly payments of only like $35. So I need you to hear this. If you're in significant credit card debt, it's going to be difficult for you to have a high credit score, but it's not going to be impossible for you to have a qualifying credit score. At the end of the day, you need to move hell or high water to make that minimum monthly payment. Ideally, you're paying it completely off or more, but at the very least, you got to make sure you're making that minimum payment, and you got to make sure it's on time. And then the amount you owed, CL, that's what it's talking about. It's living within your means. If you got, so CL, if you're opening up a credit card, American Express says, oh, CL, you're a successful realtor, you own multiple properties, you make good money, we're going to give you $100,000 limit American Express Platinum credit card. Are you going to, how much of that $100,000 credit limit you going to use, CL?
Just as much as I need. And it might only be a couple of $1,000s some months.
That's right. And what are you going to do though with that balance at the end of the month?
It's going to be paid off in full.
Yes, sir. That's exactly right. And that's what it means by amount owed. And that's a good way for us to kind of get to our next slide, because when we're talking about amount owed, really what we're talking about is we're talking about the revolving debt ratio. If you're watching this right now, here's what I want you to do. Either after this, or if you're watching the recording, pause it. I want you to go to I want you to log into your online credit cards, and I want you to download your most recent monthly statement. And on your most recent monthly statement, it's going to be the interest rate, all of that, but it's going to have your credit limit. So let's say, CL, that you have a card, American Express, a $10,000 limit, right? It is going to be very, very important. If you can't pay it off in full, let's just say, life happens, you had to get new tires for your car or whatever, and you just couldn't quite pay it in full by the end of the month. At the end of the day, as long as you've got the balance below 30% of your available limit, your credit is not going to be hurt at all. So that is hugely, hugely important. Make sure that if you're not able to pay off your cards at the end of every month, at least do the math so that you're getting them below that 30% mark. Now, if you get it below the 10% mark, it doesn't just not hurt you, it actually helps you and it can boost your score. But at the very least, keep it below 30% of your available credit. CL, if you're able to see my screen, what else here kind of jumps out to you in terms of really important scoring factors that maybe might be some low-hanging fruit that you've seen folks maybe ignore in the past? I'm putting you on the spot. You could tell I used to teach middle school, right? You got to
Yeah,
cold
and
call your
so he's
students.
putting me in a difficult position here because of, I need to get a little closer to the screen to read it, Parker.
Oh,
And
good.
then, of course, that,
Listen, get as close as you need to, CL. Get as close as you need to.
well, I mean, you've hit on some good things here. How long have you had credit?
Oh, we haven't talked about that. So what do we mean by
Yeah.
how long have you had credit? What does that even mean? And why is
Well,
that important?
well, if the longer that you've had credit, people have got a better way to kind of benchmark or determine the success. Are you going to be able to, are you going to pay it back?
Yeah. Yeah.
If I'd only had credit for a month, there's not a lot of history for you to determine how good of a risk I am.
Yeah.
Yeah, but if
that's
I've had
exactly right.
credit for 5 years, and you can see a 5-year payment history, that'll give you an idea of whether I'm I'm someone that you should lend money to.
Yeah, absolutely. And this is another hack. I call it a secret trick, hack, whatever you want to call it. CL. So let's just, this is a hypothetical. But let's say that Ashley, your daughter, she graduates high school. She's 18 years old. And something that you want to do is you want to make sure that which is what you did anyway. So this part isn't hypothetical. You want to make sure that she is starting her financial future right and on the right foot. That being said, you could probably, if you're 18, go to, a Regions Bank or Bank of America and get like a student credit card with a real small limit and start building your credit. But it's going to be tough until you've really had at least 5 years of credit history to get your score into the 700s. Not impossible, but it's tough. Well, one of my favorite tricks, CL, is there are several credit card companies that will allow you to have your children, your 18, you're not child, but your 18, 19-year-old child added as an authorized user. And as an authorized user, it's not like they get full reign to your credit card. You can actually set the limit on the credit card so that this hypothetical Ashley at 18, you might have a credit limit of 30,000, but on her authorized user credit card, the max she can spend is 250. But what's great, CL, is because you've done that, when Ashley goes to get a car note after she graduates college, when they're pulling credit, since she's been added as an authorized user on your credit card and added as an authorized user on your excellent, superb credit history, then even as a 21, 22-year-old, she might have like close to an 800 credit score. So if you're a responsible parent and you want to figure out a way to have your kids, maybe they're 18, 19 years old, establish their credit quickly, but safely, that's the other keyword, safely, trying to find a credit card or calling your current credit card companies and asking about their authorized user policies and whether or not you can customize the borrowing or spending limits on the authorized user cards. That's a great secret that can kind of allow you to have your cake and eat it too. Meaning you get your kiddo, you get to boost their credit and establish their credit, but you also aren't handing your kid a loaded gun, aka a $10,000 limit credit card either. All right. This we're going to kind of skip past. Really, this is just a clarification if you have types of accounts and payment arrangements. So individual, joint, authorized user. We talked about the authorized user. Payment arrangements. Installment's going to be like your car loans, your student loans. Revolving means revolving line of credit. It's going to be like your credit cards. Now, this is massively important. How long does information remain on a credit report? CL, do you have anybody in your life who has had to go through maybe a bankruptcy or had, collections accounts or just a tough period? Has that ever happened to anyone in your life?
Yes, it has. And I don't
describe.
recall how it would have impacted our families, but yeah, early in my life, we had some struggles.
Yeah.
And when I say early in my life, I'm talking about when I was a child.
Right.
And I recall that. And I didn't know anything about bankruptcy then, or credit reports or any of those things. But but that was part of the reason that I didn't want to have that to be something that had to be replayed again in this generation.
And have you ever had a customer or a client? Have you ever had a client, CL, come to you and they've got good money, they've got enough money to put down, they seem like they're just a killer client. But then they tell you, it's like, well, I did file for bankruptcy a couple of years back. Has that ever happened before?
Not the bankruptcy part, but it's certainly true with the credit part, where people are making very good money. They would have no problem at all putting down $20,000 or $30,000 on a $300,000 house. That's now we're close to 10%, and they can't get a bank loan.
Yeah, it happens, doesn't it? It really does. I don't think people realize. And I'm sure it's kind of heartbreaking because they think they're doing everything right. They got the good job. They saved up the cash. But at the end of the day, credit is that gatekeeper, and you got to get past the gatekeeper. Let's talk about some common credit problems and how to fix them. So here are some common credit problems. And this is what you were getting at, CL, just a second ago. So one, we've got pattern of late payments on current debts, bankruptcies, judgments or liens, past due or collection accounts, charge-offs, foreclosures or repos, and co-signing. How do we fix these things? I'm not going to read this entire list because we have the handout, but this is the hack. Besides the adding your kid as an authorized user, this is the secret, CL, that I want people to take away from this. And that's going to be, let me get my little laser pointer here. Here we go. Ask the creditor to remove the late payment. I'm going to say that one more time. Ask the creditor to remove the late payment. And then the next one, negotiate collections. Offer to pay in exchange for the deletion of a credit report. You're probably thinking, what in the world does that mean? All right. So CL, let's just pretend that life happens, and God forbid, let's say that there was a really serious medical bill that you just weren't able to pay. And unfortunately, that medical bill, you didn't pay it, and it was reported to collections. What usually happens is the hospital is not collecting that. They're going to sell it off to a collections company. And that collections company is going to be calling your phone nonstop. Well, eventually, if they can't collect the money, they're going to do something called a charge off, meaning they're writing it off their books. It's actually a business expense. So they're writing it off of their books. And so what that means is you've got this charged off collection account on your credit report, and it's going to stay there for 7 years, and it's going to be killing your credit, even just one. And I'll give you another example. When Missy and I moved from Memphis, we did what everybody does, which is we called our utilities company and we said, hey, we're moving. we're moving. No, we don't want to pay that. Well, long story short is I get an alert about 6 months down the road from Credit Karma and Capital One, and my credit score, CL, had dropped over 100 points. Well, get this, is when we moved and we disconnected, there was a disconnect fee that was retroactively charged. And where do you think they mailed the disconnect fee bills to? To the house to the whole place. So I had no idea. I had no idea at all. No idea because they kept sending it. Well, my credit, I'm like, oh my gosh, I'm panicking. My credit's gone down 110 points. And you know what's crazy? It was a $25 disconnect fee, $25. But it was on my credit report, collections reported to, and I had collectors calling me. So here's what I did. This is why I'm grateful to have my dad, is most people, what would they do in that situation? They're like, here's the $25, right? Here's the problem. You pay them that money, it'll be settled, but it's still going to be a collections account on your credit report for 7 years. So here's what I actually did. I said, y'all did me wrong. It should never been reported. Y'all should have emailed me. I never got an email. You kept sending this bill to a house I don't even live at anymore. I said, here's what I'll do. Y'all can either keep wasting your time and blowing up my phone, and you're never, ever, ever going to get your $25. Or I'll pay you the $25 right now. I will read you my credit card number, but I need in writing that this is going to be a pay for deletion. And every single collections company, CL, has that form. It's an agreement form. It's documentation to where they say Parker Couch has settled X collection account. we, X collections company, agree to delete X negative event, blah, blah, blah. I then took that form, CL. I then filed a dispute with all of the credit bureaus. And guess what happened? Fell
Your
off my
score
credit.
went up.
Oh, yeah. It went away. It's like it never even existed. And so if that happens to you, and I'm like, see, my dad's probably a lot like you, man. That was because my dad was doing loans like Jimmy Carter was president, right? So like he's been in this game a long, long time, and he preached to me. And so the fact that I had a collections on my credit report, I about died. You would have thought it was the scandal of the century. But here's what I'm grateful for: is if you're watching this and something in this life happens, and you've got collection agencies calling you, and you're tempted to just go ahead and pay it. And this may be controversial, I wouldn't pay it unless you get documentation that upon you paying, they'll delete it from your credit, because that is something they can do. And most people don't know that they can actually do that. Did you know that they can do that, CL? Or is this a trick that you just learned yourself?
I wasn't familiar with the form to ask to be, so you could be released. I knew you could be released somehow.
Yeah.
I didn't know how that was.
Oh yeah, that's why we're calling it credit secrets, right? It's not credit messages shouted from the rooftop. And this is what I was just talking about, is how you actually correct errors in the credit problems. Make sure you download the handout. There's a step-by-step guide on exactly how you can kind of play the game to make sure you don't have negative events reported on your credit. And here are our quick credit fixes: asking for payment before credit repair services are provided, advising you to dispute all negative information, overpromising quick results, and helping you get a new identity. These are all danger signals. So if you're getting in front of somebody who says they can fix your credit and this is what they're promising, run for the hills, because it is a scam, and you're just going to end up hurting yourself, and you'll be out some money. Now, CL, there are some things that you can do to actually increase your credit score, and it's called non-traditional credit trade lines. Did you know that you can actually ask your utility company to report your on-time payments? You can do that. You can say, hey, will you please report that to the credit bureaus? And you'll sign off on a form and they'll do it for you. You can also ask for your child care and your child support payments to be reported. And you can also ask for any additional large recurring expense to be reported as well. So these are a little bit more time intensive and complicated to get reported out. But CL, if you're ever working with a borrower who maybe is short on credit history or is trying to reestablish their credit, these are 3 things that you can ask them. And if they're working with either me or hopefully a lender who knows this stuff, there are some ways to quickly establish and or increase your credit. That's pretty cool, isn't it?
Well, Parker, you are our subject matter expert. Okay, this is you speak about this with authority, and that's a good thing. So anytime something like this comes up, I'll just forward them to you.
That's perfect. Look, that's what does Bill Belichick, the NFL coach, say? Do your job, right? Stay in your lane. That's right. And that's also why, CL, if I ever got somebody who's pre-approved and needs to buy a house, I want to send them over to you and Ashley, and I'm going to tell them to sleep like a baby, because you guys are going to be the experts on finding them a house and negotiating the best deal.
Yeah, we'll take good care of them.
Yes. We're going to skip this slide. This is all about reducing your risk of identity theft. Please download the handout. There are some really easy ways that you can make sure your identity is not stolen. The reason that's important: if your identity is stolen, they're not just doing it for kicks and giggles. They're doing it because they're going to try to actually start opening up credit cards, buy houses. It's not impossible. If your identity's been stolen, there are some ways to fix it, but buckle up, because it's hard to do. And then also want folks to know that you are way more protected when it comes to your consumer rights than you realize. I would encourage everyone to Wikipedia Equal Credit Opportunity Act, ECOA, and Truth in Lending Act, TILA. These were all passed a little over 12, 13 years ago. And they give you a lot of protections that people aren't even aware of. That's also for other 2 acts that were passed. These are a little bit older. We've got the FCBA, the Fair Credit Billing Act, and then FACRA, the Fair Credit Reporting Act. These are 2 other pieces of legislation, law of the land, that protect your rights as a consumer. And then we've got the Fair Debt Collection Practices Act, which I gave I gave this piece of legislation its own slide, because here's what it does. It prevents collection agencies from doing the following: failing to identify themselves, calling your home before 8 a.m. or 9 p.m., contacting you after being told in writing to stop, harassing, oppressing, or abusing you, falsely implying that you committed a crime, telling others that you owe money, failing to contact you through your attorney. So why is this a big deal, CL? Do you know how often collection agencies employ people who don't know these rules? Like, I'm talking collectors are brutal. They'll call you at 11 o'clock at night. They'll do all this. And so here's why that's important. If you can document that your collectors are not following these fair debt collection practices, you got yourselves a real strong case to dispute those collections and then get them legally dropped off and removed from your credit. So if you're getting harassed by collectors, you need to tattoo this one on your body, because the second those collection agencies violate one of these rules, you got them. You got them dead to rights. Did you know any of this stuff, CL, or is this a new hacker trick for you?
I've heard some of this, but this is good information, Parker.
Good. Well,
this is probably one of the, I'm fortunate to be able to be on this particular webinar with you, because there's so much knowledge based with this that just about everyone needs to know, not just people that don't have good credit, but people that do have good credit. Because
that's a great point. Yeah. Tell me about that. Why would people with good credit need to know this?
Well, I was just thinking, Parker, I've got a lot of cash buyers that do deals with us. And there's times, and I've kind of listened to them, they said, I've got plenty of cash, but I might be better getting a mortgage for this particular deal and using my cash for some other investments I want to make.
Okay.
So a lot of people may not think about that. So even wealthy people, maybe there's times that borrowing money to buy a home or buy properties is the way to go.
Yeah.
Now you could probably help counsel them through that.
That's a great point. I think that sometimes folks are allergic to debt. Well, here's what I want people to realize, and I preach this all the time. Pretty much, well, actually, I'll ask you the CL. So if you were to go and buy a brand new car today, and you bought that brand new car with a loan from the dealership, 4% interest rate, that would be excellent. A really good interest rate. What's going to happen, CL, to the value of that car the second you drive it off the lot?
It's going to lose probably 20-25% of its value.
And then what's going to continue to happen the more you drive that car and the older that car gets?
It's just going to start wearing down and losing more value.
And I give that example because almost everything in life that we go into debt to get, it's stuff that we need, but it's also stuff that loses its value. But there is one big exception.
What the business that we're in, real estate.
That's right. Is if you just Google real estate appreciation, type in your zip code, or the history of real estate appreciation and type in your zip code, you can get literally charts, CL, that go back to the Great Depression. And I'm telling you right now, if you look at that chart, you'll see the ups and downs. You'll see the Great Recession. You'll see bubbles, all that. But at the end of the day, it's time in the market. It's the long game. And that's why the cliche is true. Real estate is the best investment for yourself as in a primary residence. But also, if you're fortunate enough, real estate's amazing. It's probably going to be way better than any brokerage account that you're going to open up with Vanguard. And so I love that point, because if you have the cash to buy a home, well, let's think about this. If I got $1 million, right? CL, if I got $1 million and I got great credit, and I'm trying to buy one of you and Ashley's $900,000 lake homes that you're listing, I got the cash to do that, right? But let's say that lake home is in an up and coming area. It's probably going to appreciate in value 5 to 6% every year for the next 15 years. Well, if I'm borrowing $800,000 for a loan, and then that $800,000 is at a 4% interest rate, right? Mm-hmm. And then I've used that money I've borrowed to buy a home that's worth $800,000 or whatever. And then that home is going up in value every year, 6-7%. That's what you call house money. Yes, you went into debt, but you went into debt to buy an asset that's appreciating in value. And you know what my favorite thing about this whole scenario is? You still got like $1 million. And what can you do with that $1 million? You can have that money working for you. So you can have money you've borrowed working for you because you have an asset that's going up in value. And then you can also take the cash that you otherwise would have burned, and then you can invest that in some other ventures as well. So CL, that's a brilliant point. Is I think that we have I have been focusing on, hey, if your credit's bad, pay attention. Or if you're new and you don't have credit, pay attention. But you're exactly right. If your credit's great and you got a crap ton of money, you still need to pay attention. All right.
I could have tied that into a better slide, but it's so important what you said. Thank you.
No, of course. No, that was perfect when you said it. The spirit was moving, as my old pastor used to say. All right. Let's do a quick little pop quiz. If you're at home playing along, I'm going to, just imagine some Jeopardy music. All right. Actually, CL, I'm going to put you on the spot just because I know Ashley's going to love it. So if you're feeling uncomfortable, all right, here we go. So let's see how well you're paying attention, CL. And this will be graded because remember, Ashley and I used to be educators. All right, pop quiz. Let's review. CL, what makes up the largest piece or the largest part of your credit score? Is it A, type of credit used? Is it B, length of credit history? Is it C, payment history? Or is it D, new credit?
Well, I hope it's C.
Let's see if you're right. Just kidding. We'll find out at the end. That's all right. So C. So C is your answer for that. We'll see at the end if you got it. All right. Here's the next one. For an optimal credit score, the maximum balance one should carry on their credit card is blank percent of the card's credit line.
30%.
Oh, I didn't even look at you. You're like that student who doesn't even have to have multiple choice. All right. Next one. Which of the following helps you reduce your risk of identity theft the most? Now, I'm sorry, we kind of skipped over these slides, but you'll get this. Is it A, writing all passwords and PINs in a notebook? Is it B, ordering and reviewing your annual free credit report? Is it C, giving out your social security number over the phone? Or is it D, opening a credit line under your spouse's name? Which of those will reduce your risk of identity theft the most?
Well, that one's pretty easy. That would be a B.
All right. We'll see if you're right at the end. Okay. Oh, no, I deleted that slide. Okay, CL, listen, I'm not going to cheat you. Here we go. The correct answer for this slide is A, payment history. All right. Look at you, Gold.
And I had said given a different answer.
Oh, no, you had said payment history. Yeah. So which of the following does not affect my credits? Oh, I'm sorry. We skipped this one. Oh my gosh. We started here. What makes the largest piece? Okay. So you got that one right. But here was the first one that my fingers are heavy, CL. Sometimes I skip by the slide.
Payment history.
There's right. Which of the following does not affect my credit score? So which one does not affect my credit score? Payment history, length of credit history, bank account balance, or amount of debt?
Bank account balance.
That is correct, CL. That does not affect your credit score. All right. So we're 1 for 1. 2, what makes it largest piece of your credit score? You got this one right. That is C, payment history. You're 2 for 2. Next, for this one, for an optimal credit score, the answer is A, 30%. Let the record show. CL didn't even need to hear the choices. He knew that one at the top of his head. And which of these reduces your risk of identity theft? It is definitely B. Get your free annual credit report so that you can make sure that no one has stolen your identity. If you have any questions about this subject matter, and we're about to get to questions that anybody asked, I've got these amazing resources. They're on the Homestar blog, as well as the CFPB. That's the Credit Federal Protection Bureau. It's a government agency that exists to protect your rights as a consumer. Okay, CL, let me stop sharing my screen. Give me one moment. All right, stop sharing. Let's see if we have any questions. Give me one moment here. Q&A. All right. I'm going to go to the Facebook too. All right. So we do have somebody. We have two of my students. This is kind of cool.
Right.
So we've got two of my students who were watching this. Shout out to Chris and shout out to San Bernardino. Gosh, just so you know, Chris and San Bernardino, y'all were some knuckleheads when I taught you in 6th grade. So the fact that you guys are asking me about your credit, that makes my heart happy. All right. So the first question is it a good idea to cancel my credit card if I don't want to use it? That's a great question. The answer is, it might surprise you, that's a terrible idea. If you have opened up a credit card, do not cancel it. Do not cancel it. The second you call and cancel it, it's a negative reporting on your credit report. Instead, pay it down to 0, cut it up with scissors, forget about it. Pay it off to 0, cut it up, forget about it. Eventually, and I'm trying to remember, it's either 3 or 4 years, eventually the credit card company will close it out and that will not hurt your score. So that's very important. Have you ever seen folks who are trying to get out of debt and they call and can't try to cancel their credit cards? You ever heard of that before, CL?
Well, no, but I have canceled credit cards. I didn't realize that.
CL, oh my goodness.
Yes.
We should have had.
The reason I've canceled them is, some cards are quite good. Like the Sapphire Reserve cards, you pay $500
That's a great one. Yeah.
a year for it. Some of the others, you pay $60 or $90 a year.
Right.
And so if you're not capitalizing, not maximizing the benefits of some of those cards, and you had several, and you got them for reasons maybe to accumulate airline points.
Right. Then
you've already met all the requirements, but you're not using 1 or 2 of those cards anymore, and you're paying $90 and $60 a year for those.
Yep.
What do you do?
Well, here's why that's okay in your circumstance. So if you remember, CL, whether you got an 850 credit score or a 740, right? That's like 100. You're going to get the same deal. So I'd imagine your credit score probably is in the 800s. And so if you cancel a credit card, sure, your score might go down 3 or 4 points, but it's really going to be like a drop in the bucket. Right. That being said, where that can hurt people, let's say that you weren't you, but instead you were someone who had like a credit score hovering around 600, right? You need every point you can get. So you're CL, you have, because of discipline and because of you starting your financial journey off right as a young man, that's allowed you the privilege to, cancel a credit card or 2 and it really not hurt you at all. Does that kind of answer your question?
It does, but the information is good information. It's the kind of information that I would want to share with someone that I was close to.
Right.
Maybe they don't know this.
Yeah, for sure.
I didn't know it till just now.
Well, there you go. All right. This is our second and our last question. And this is a good one. And this is, my brother has really bad credit, but really needs a car. He's asked me to co-sign. What should I do? Oh, goodness gracious. I'm pausing because at the end of the day, blood is thicker than water. And I get it. I really do get it. Family is so, so important. Here's what I will say. I would say that if you're going to co-sign for somebody who has poor credit, I would have a very difficult conversation with them where they would need, if it's me, they would need, and their family, and they have bad credit and they need me to co-sign, I'm going to have we call it across the dinner table conversation. Not going to be over text, not going to be over phone. We're going to look eye to eye. And I'm like, all right, talk me through what happened in your past that got you bad credit, and what are you doing now, and what are you going to do in the future to make sure that you do not miss a single payment? Because if you do miss a payment, I'm going down with you, and I can't do that. So that would be my answer. Is at the end of the day, it's probably not the smartest or wisest thing to do, but if you do decide to do it, bare minimum, have the difficult conversation so you feel comfortable with that family member's plan to make sure that they don't make their bad credit situation even worse. Any thoughts on that last question? That's a tough question to end on, but it's a good one, and it's a very real world scenario.
Parker, here's my thoughts. You could have that across the table, eye-to-eye conversation, but at the end of the day, you need to be thinking about, I may not get my money back.
Oh yeah.
So if you give it as though that you realize it may end up being a gift.
Yeah.
Otherwise, there's going to be a lot of heartache for the rest of your life each time you see that person.
Yeah, that's a great point. So it's really more of what you're saying is merely from a mindset is if you say yes because you're assuming you're going to get that money back, and if you don't get it back, there's going to be resentment, probably shouldn't do it. But if you enter into that agreement with this idea of like, you know what, this is going to be a gift, and if it gets paid back, then that's just gravy. That's good. I really like that perspective, CL.
Yeah. Now you don't want to tell your friend or your relative that it's a gift.
No, you don't want to do that.
They're expecting it to be paid back.
Right.
But in your heart, you got to realize, I really love this person so much. I'm going to do this.
Right.
And there's some risk. But if you're not willing to forgive it, it could just break a relationship for forever.
Yeah, that's so true. That's so true. Well, CL, we're 2 minutes over, and we're 2 minutes over because I had a blast doing this with you. Thank you so much. I mean that sincerely. This was so much fun, and I'm excited for Ashley to come back. But you better believe I'm going to have you and Ashley. We're gonna have you and Ashley tag team one of these because you brought a lot of perspective and wisdom to this conversation. And I will say, in all sincerity, folks, if you're trying to buy in the North Georgia area, CL and his daughter, Ashley, just the best in the business, and they're going to take care of you in ways you never dreamed of. Thank you so much for watching. Please make sure you subscribe and sign up. We do First Friday Real Estate. You guessed it, happens the first Friday of every month. We'll see you next month for our 2023. That's right. Can you believe it? 2023 First Friday. Until then, CL, thank you so much. I'll talk to you soon.
See you. Bye-bye.
Bye.